Nick Dole there. Let's go to finance now. We're joined by author of the Stock Market newsletter, Marcus today. Marcus Padley. Hello, Marcus.
Hi, Marcus.
You must have been a little bit sad yesterday when the stock market hit an 11-month low, along with lots of investors.
Yes, an 11-month low. I think the message, sometimes when there are these big macro moments like the Fed meeting last week, it just takes a little while for the message, if it's a big message, to seep into the market, I think, or to seep into the New York skyscrapers and the asset allocation meetings, where all it takes is someone like Fidelity to say, let's just move a little bit of money out of equities into bonds, or vice versa, and it takes weeks to sweep through, and we seem to have that happening at the moment. We're just getting used to higher interest rates, and the RBA as well have said the same thing, that they're just going to stay up in case.
You have, and I haven't heard this stock market expression before, Marcus, you have a tingle about potential comparisons with shocking market events previously.
Yes, we call it a precipitous tingle. So I've done
Where do you feel that?
Steady.
In the bank balance. A slightly precipitous tingle. It doesn't happen very often, but I do think you have to time the market. I know everyone says you can't. I won't go into the reason they think that's a good idea. You can't, but you can. And you have to watch out for those occasional moments. You know, once every 5 years, the market will do a 15 to 30% drop, and it tends to do it quite quickly, and it tends to give you a bit of a warning as you sort of disappear into a bit of a hole. And since that Fed meeting, we've sort of been accelerating a little bit, and there are some of the other indicators. Our volatility is picking up a bit. The Aussie dollar, for instance, dropping away. That's not good for Australia. The Chinese market's gone on holiday for a week, but there's no decent vibe out of resources either. The interest rate vibe's not going away. So just getting that little feeling, which just says, you know, you can be Jon Snow, stand in front of the whole herd in the, you know, Battle of the Bastards, and defy it, or you can just get out of the way. I think it's time to just get out of the way, see what happens.
When will we know if your tingle turns into something then?
You don't have to predict anything. You just, I believe you don't predict, you react. So you just wait for the bottom, you wait for the macro reasons, you wait for the Fed to say, okay, that's high enough on rates. You wait for the RBA to cut rates, and then it'll all start moving, and then you can get involved again.
Now, people, of course, get their own financial advice, but in terms of protecting themselves, income stocks, what's the best from your perspective?
Michael, there's an interesting comment made by one of my members on email the other day, which was, I really don't care about share prices.
Right.
And the idea was that I'll be giving those to the kids. So I don't really care, and all they're really interested in is income. And one of our members, for instance, quite famous now for saying that he has all his money in the CBA.
Right.
And and for anyone who's worrying about the market falling out, every market correction has led to a fantastic opportunity, and most of the time those corrections, apart from the very big ones, we've sailed through it on big quality stocks. And I think volatility is something that's under measured in the equity market. So you've got stocks like Telstra, all the banks, Telstra, Woolworths, Coles, infrastructure stocks. They move about 2 to 4% a week. In the same breath, people will talk about tech stocks. They move 10% a week. So you've got to be aware of risk. Even BHP is moving 5-6% a week. So there are this group of stocks. They've got very boring businesses, mature payout dividends, high payout ratios, that you really don't have to worry about too much, that are low volatility. And some people just sit in those, they'll hand them to their kids. They're only interested in the income, the franking, and those genuine investors, not traders.
Well, banks have done very well in this high interest rate environment, as we know. That's plenty to think about, and of course people should get their own financial advice, as Michael says, their own investment advice.
And good luck with the tingle.
Yes.
Yes, well, hopefully it doesn't turn into anything more than a tingle.
Well, I only know of good tingles like Laura, so...
fruit tingles?
Fruit tingles, I like them
also
too.
good tingles.
I've got my Trump tie on. This, of course, could add a bit of volatility to the stock market. It did last time.
You got the uniform, indeed.
Yeah, well, I don't want to be out of step with everyone else.
Okay.
Trump's coming.
On that point,
Trump's coming.
Marcus, thank you very much.
All right, thank you.